Today we're breaking down candlestick patterns, the most powerful tool in trading when you actually know how to read them. These candles tell you when momentum's shifting before the move even happens, and once you master that, you'll never chase plays again. Let's get straight into it. If this breakdown helps you see the market clearer, do me a favor, let's hit 100 likes on this video. You've probably seen candle moves up and down a million times, but when you actually start to recognize the story behind the candles, that's when everything changes. So let's get into this AFRM chart and talk about why these reversal patterns are so powerful and how I personally trade them with confidence every single time. Looking at the chart, I've highlighted two spots where AFRM printed what's called a morning star pattern, one in late August and another in late October. These are textbook bullish reversals. They form after a pullback when sellers start to lose control and buyers quietly step back in. The pattern is made up of three candles. The first one's a big red candle. That is where sellers are in full control. The second one is small, a doji or a spinning top, which shows indecision. Then the third candle, a strong green close that pushes back into the red candle's body. That's your shift in power, aka shift in momentum. Both of these setups form right near short-term support around that $68 to $70 zone, and that's what gives them weight. Candles by themselves don't mean much until they line up at key levels. This is the kind of structure I look for over and over again, and to be real with you guys, most traders miss it because they're too focused on indicators, but indicators simply react, candles predict. When you see a morning star, what you're really watching is a battle for control. Bears push, price stalls, and bulls reclaim. And here's the thing, I don't trade the indecision candles. I wait for the confirmation, that strong green close that proves buyers are taking over. Once that happens, you've got your entry trigger. Stops go below the pattern low. If it breaks that level, simply have no emotion and just move on to the next play. Here's how I personally approach these setups. I enter on confirmation and then I size small on the first entry, then add once we break the pattern high or print a higher low with volume. That's what personally gives me conviction when I trade, because when you combine a reversal pattern and a key level, your odds instantly go up. And look, this might sound a little cocky because most traders see the same pattern and still lose. Why is that, you guys might ask? Because they ignore context. A morning star in the middle of nowhere doesn't mean anything, but a morning star sitting on a tested support level after RSI curls back up from oversold, that is where I start to take notice. If you look at the RSI, both times we saw these morning stars form, RSI was curling up from the lower range. That's momentum telling you the seller's pressure is drying up. The best reversals happen when RSI bottoms with the pattern, not before. I also personally look for strong body candles, not the skinny wicks you see all over the place. When that final green candle closes big, that's confirmation of real buying pressure, not just shorts covering. Of course, I'm not going to give you guys just one pattern to study. I'm going to show you guys another chart, which is Tesla. So let's go over how this pattern formed, what it tells us about momentum, and why it ended up leading a major reversal in Tesla's price. If you look at the chart, we're coming off a steady downtrend. Sellers were in control, pushing Tesla lower for several sessions straight. Then right near that support zone around 150 to 160, depending on the time frame, something important happened. A bullish engulfing pattern was forming. Now, for anyone who's new, this pattern forms when the first candle is a strong candle. That's heavy selling pressure. The second candle opens below the first, but then completely engulfs the prior candle's body and closes higher. That's your shift in control. Sellers just got run over by aggressive buyers. On this Tesla chart, that exact thing happened in early May. You can see that big green candle reclaiming the entire previous day's range. That's the kind of move that doesn't happen by accident. That's a sign institutions are stepping back in. When I see a bullish engulfing candle, I'm not just seeing colors, I'm seeing control flip in real time. Bears were driving and now bulls have snatched the wheel, if that makes sense. What makes this one even stronger is simply context. It printed right at a demand zone where buyers previously stepped back in. If you look at the RSI once again, it was sitting near the lower range, and as that engulfing formed, RSI started to reverse. That's your confirmation that momentum is shifting. So how you should approach these type of setups: wait for confirmation, meaning I don't buy on the red candle, I buy after the engulfing close confirms buyers have taken over. Next, my stop goes right below the pattern low. That's my invalidation. If sellers push it below that level, the setup's dead, and then I move on to the next trade. You then have your first target. That's the next short-term resistance. In Tesla case, around 175 to 180. And then your second target would be probably 200 to 210 zone, where previous liquidity got trapped. If you look back after that engulfing printed, Tesla ripped almost immediately. That's how you turn candle patterns from just a cool visual into actual profit setups. Every candle you see isn't buying strength, but when one candle completely takes back everything sellers just did the previous day, that's a momentum shift you do not ignore. You can think of it like this. A normal green candle says buyers are showing up. A bullish engulfing candle says buyers are dominating. This pattern doesn't just mark a bounce, it often marks the start of a new short-term trend, and on strong names like Tesla that can run hard. If you want more educational breakdowns like this, make sure to join the email list below. That's where I'll be posting exclusive content like this, my weekly watch list, and even the personal risk calculator I personally use on my own trades. Also, the Discord is currently closed until December 1st, so if you're trying to get in, make sure to click the link in the description and join the waitlist now before spots fill up. Appreciate you guys for the support. I'll catch you guys in the next video.